Hello and welcome to the show. We're slightly changing the format for today. We're going to be looking certainly at the auction markets ahead, or the auction numbers ahead. We'll do that in just a moment, but we're also going to have a look at the CoreLogic Property Pulse, take you around the country, have a look at median prices, days on market. It's a really good indicator about what the market is doing. Kevin Brogan will join me from CoreLogic in just a moment.
Outsourcing will dramatically improve your productivity and profitability. Sure Agents have created a staffing solution to provide great staff who can perform duties in property management, sales, marketing and administration, and at a fraction of the cost, giving you and the team more time to spend on the dollar productive tasks. With rising costs and slowing revenue, the focus must be on value for money. Check it out, sureagents.com.
Kevin Brogan, CoreLogic, is with me. Kevin, welcome to the show once again. First up, we'll just bring up the final auction numbers for last week. Quite sober, these. I don't think we'll spend a lot of time on these ones, Kevin.
Oh, look, there's a couple of challenges, as we've discussed before, with collecting auction data at the moment, and that is the highly fluid situation with coronavirus. But of course, we had the Easter weekend included in this last set of data. So volumes were really low, particularly in Melbourne. Still a bit of activity in Sydney, but nonetheless, as we would expect, just on a seasonal basis, we see the Easter weekend very quiet.
Yeah, we'll bring up the auction numbers for the week ahead, which are looking quite good actually, but we'll bring those up for you later in the show. Let's go to our second graphic, which is we extend the show. We're going to have a look more at what's happening in the market. These stats, of course, coming from CoreLogic's Property Pulse. The capital city home value changes we bring up first. Interesting to note here, and we can see the growth in Sydney and Melbourne in the last year, 13.8% out of Sydney and 12.5% out of Melbourne. Really very strong, but sobering to see what's happening with the market now, almost coming back to a fairly, stable situation in Sydney and Melbourne. Kevin.
Yeah, so obviously, if we track these figures over time, we're going to see how they're altered. Some of the data here, for example, the monthly change data, obviously relates to a period that is prior to the COVID-19 restrictions that have really impacted on the market. But you're right, particularly Melbourne, very strong growth, 12.5% over the last 12 months. And we've now seen that over the last week move into negative territory with the reduction in market activity, and also the sort of reduced market confidence.
Mm. Yeah, monthly change, as you say, we shouldn't draw too much from this because this is pre-COVID. It'll be interesting to watch what happens over the next few weeks. Take you to our next graphic, which is the capital city properties listed for sale. The reason I'm keen about this is because this, as we're going to identify in a moment, days on market are a good indicator about how the market's moving. But the stock that's coming through now, if it takes another month or two to sell, and the stock levels continue to grow, then we see an oversupply of stock. But that's certainly not the case. These figures aren't showing that. Surprisingly good growth, even month on month and year on year out of the Sydney market. Kevin.
Yeah, look, it's interesting. We're, again, following these as we move forward, I'm fairly confident that we're going to see the number of new listings decline as we continue through the impacts of the coronavirus. But it is interesting looking at Sydney. There's still 5% more new listings than this time last year. I think it's important to notice that that's a sort of static comparison with what happened last year. And in 2019, remember, the market really picked up after the election in May. So the comparison is with a time where the market hadn't yet started to respond to the increase in confidence. But if you look across the other markets, you'll see that all of the others are showing a reduction in listings compared to last year. Probably the most noticeable reduction is in Adelaide, where it's 23.7% down on the basis of a market that was performing reasonably strongly up until recently. By strongly, I mean a sort of steady performance. Quite unfortunate, I think, for Perth we started to see a little bit of improved activity in Perth, but obviously this latest obstacle in terms of coronavirus has had quite a big impact in the number of listings, down almost 40% on last year.
Yeah, so we're looking at 17% down year on year across the nation. Now, next graphic, capital city private treaty median prices. I was struck here with the difference between Sydney and Melbourne, over $100,000. Sydney's still leading the pack, of course, at $800,000 as the median.
Yes, absolutely. As you would expect Sydney to be out in front in terms of the median house price. That has come down just a little in the last week or two. But it's interesting looking at these median prices. You see that Hobart and Darwin are almost at the same sort of level. Of course, in Hobart, you've seen the median price increasing to that point, whereas in Darwin, you've actually seen it decreasing to that point. And both of them fairly close to Brisbane, which is just a little bit higher at 500,000.
Yeah, I was struck with Hobart and Darwin, looking at those medians, very, very close to Brisbane. But if you look around the country, Canberra extremely high at 713,000. Even the median in Canberra is higher than the median in Melbourne.
Yeah, absolutely. I mean, we've through our auction discussions, we've reviewed some fairly high-priced properties selling in Canberra, and certainly in terms of houses, we've commented on how they've got larger blocks and sort of set in parkland sort of settings. So there's obviously a lot of quite high-value housing stock, and you can see that by contrast, the median price for units is a fair bit lower.
Yes. Yeah, still. Well, actually, you're having a look at those median prices for units. Look at Hobart at 452,000. It's the third most expensive median in the country.
It is, that's right. Probably quite a small market for units in Hobart by comparison to the other capital cities, though.
Yeah, good point. Our next graphic, I guess, dealing with the same figures and the same stats, but just shows it in a different format. The median house and unit prices just displayed that way. Yeah, it's interesting to have a look at it in that format, Kevin.
Yeah, look, absolutely. I think graphical representations are actually pretty good. I mean, I'm a graph sort of person. I mean, we obviously deal with a lot of numbers and data in tables, but certainly the graphs and make it a bit more visual.
Let's have a look at the median time on market, or days on market. This is from the point of listing to the point of sale. And also interesting, in our next graphic, we'll have a look at the vendor discount results. Just a couple I want to pull out there. Obviously, Sydney and Melbourne, days on market, 28 days and 30 days. But once again, I'm sure you're going to point out this was pre-COVID. That probably will change.
Yeah, look, so I think it's good to keep an eye on this sort of data and see how it changes. This is obviously a rolling time on market. So as we move further into the coronavirus restrictions, we'll see the impact more clearly. But I think what we'll see as we look at these is, Sydney and Melbourne basically sitting at around a month still, very quick time on market. And relatively small vendor discounts, which again I expect will possibly increase as vendors have to meet price expectations under the new sort of softer market conditions. It's worth looking also at Perth. 53 days is the longest of the marketing periods. The vendor discount is relatively low there, but I think that's probably vendor conditioning, because we've actually seen, softer market conditions in Perth for quite an extended period.
Interesting, having a look at Hobart for a moment. The shortest time on market for both houses and units in the country. Am I correct there? Yes, yes, I am correct. But the vendor discounting, particularly on houses, at 3.2%. Now, this is the amount of reduction that a seller has to or reduce their price by to achieve the sale. This is what we call vendor discounting. They seem a little bit out of whack, because I would have thought shorter days on market would indicate very much a seller's market, they wouldn't have to reduce as much, Kevin.
Look, that's certainly the case, but we're in a transitionary period here where the Hobart market has actually been performing really quite strongly all through the softer market conditions that we experienced in the mainland capital cities through 2018. The interesting thing about vendor discount is it is really based on the expectations of the vendor. So what it could be representing is that in Hobart, there's been an extended period of increases. And so vendors might be setting their asking prices, assuming that trajectory to continue upwards, and then having to meet the current market conditions where perhaps it's leveling off a little.
Yeah, another point I want to make too, and that's the Brisbane market, 52 days on market, which is not, it's one of the highest in the country, but it's not unusual for a days on market to be around 60 days. But the thing that struck me was the vendor discounting at 2.7%, one of the lowest in the country, would indicate to me that there's probably a little bit more discounting that has to take place in the Brisbane market to achieve a lower days on market, Kevin.
Yeah, look, I think that may be the case, but again, as we move into these sort of uncharted territories of the coronavirus impact, it is going to be interesting to see whether or not we see the number of days on market actually extend out as purchasers potentially decide to defer a purchasing decision.
Indeed. We'll just take you to our final graphic now, which is auction numbers for this week. As I said at the start of the show, they're looking reasonably healthy compared to some of the past weeks, certainly not weeks going months back, but Sydney at 693 and Melbourne 706. They're fairly stable sort of numbers, Kevin.
Look, there's still a reasonable number of properties that were scheduled to go to auction this week. Of course, we're in a very uncertain auction environment at the moment, and what's really difficult to measure is whether those properties that we've picked up as being scheduled for auction actually proceed to auction. So as we speak now, it may well be that agents are working pretty hard to either agree a sale prior to auction, or certainly agents are also working hard with withdrawing properties from auction, but pursuing expressions of interest and private treaty sales.
I guess we'll get more of an indication about that on Monday when we come back with some of the figures, and even next week as it rolls out, Kevin.
Yes, absolutely. We certainly will.
Okay, well, that's our wrap for this week. Thank you very much to Kevin Brogan. Thanks to the team at CoreLogic, their fantastic report. We've drawn this, of course, from their auction update report and also their property pulse. And you can get all those details at corelogic.com.au. Kevin Brogan, all the best, my friend, and look forward to talking to you on Monday when we'll give you a full wrap and we'll take you inside some of the top sales around the country, achieved a sale over the weekend. Thanks for your time, Kevin.
No problem at all. Thanks, Kevin. Speak to you soon.